Hello and welcome to this quarterly update with SKAGEN Global and portfolio manager Knut Gezelius. First, Knut, SKAGEN Global is a bit behind its benchmark index. Give us a quick recap of what happened the last 3 months.
Yeah, so looking at the market here and the fund in the second quarter, things were coming back quite well the first couple of months, and then you had some bad employment figures coming out of the US. And after that, in late June, the Brexit referendum, which obviously was negative for the market and also had a negative impact on SKAGEN Global. In terms of activity, we picked up 2 new holdings in the fund. Skechers, a US-based footwear company with a compelling emerging market growth story. And Hiscox, a UK-based insurance company, well-managed, very well-positioned to deliver value over the long run.
The world post the UK referendum. What implication has the Brexit had on SKAGEN Global?
Yeah, so Brexit has been a negative event for SKAGEN Global here, and there are 3 factors that is worth pointing out. First, obviously the currency. The fund has about 7% listed in the UK, and with the pound depreciating around 10%, that has been negative. Second part is about the nervousness of the market. We've seen volatility, especially in the bank and the insurance sectors, and the fund is overweight in financials, so that has had a negative impact on the fund. And then the third part is more of a general nature about the flight to safety. So with the uncertainty in Europe, in the UK, we've seen investors move toward the US. And SKAGEN Global has been underweight the US, and that has been, again, a negative impact on the results.
Now let's turn to financials. As you mentioned, you are overweight in that segment. Big part of the portfolio is AIG and Citigroup. Why?
Yeah, so looking at those, these are very much kind of bottom-up stories here, and they're big positions. And to be a big position, you need to meet 3 criteria. First, we need to have a clearly differentiated view on the stock. Second, valuation should be cheap. And third, the downside should be protected. And take the example of AIG. This is a self-help story. They can do a lot about costs. They can do a lot on the underwriting. The market is more focused on the short term, looking at some of the accounting earnings and so forth, whereas we focus on cash flow, looking out 1, 2, 3 years into the future, and we think that's a very different view than the market has on it. Second part, valuation for AIG. It trades at around 0.6, 0.7 times tangible book, compared to peers, which are trading at 1 times or even above that. So the gap is big, and we think it's too big, and that should be closing over time. And third, about the downside protection, AIG is going to do $20 billion of buybacks over the next 7 quarters. And compare that to the market cap of AIG, which is 60 billion, that should protect the downside from here onwards.
Okay. Now, looking a bit ahead, in your view, what will affect the portfolio going forward?
Well, looking forward, there's always going to be uncertainty. There will be macro events happening, some expected, some unexpected. Here it's important to remember that SKAGEN Global is about bottom-up stock picking. Of course, we're aware of what's happening around us, the social, the political, the economical context in which the companies operate. But first and foremost, we analyze companies. We're not political analysts, and we'll continue to be company-focused as we look forward.
Thank you very much, Knut. And thank you very much for watching.